Hi guys, I'm Sam, this is Chris, and thanks for tuning into our channel where we explore achieving wealth and financial freedom through a three-part strategy. Earn more, spend less, and invest the rest. Today's video, we are going to be talking all about stock buybacks. So Chris, why don't you get us started by explaining what are stock buybacks?
Okay, so stock buybacks are when a company uses cash to buy back its own stock on the market and retire those shares, so there's less outstanding shares available for the rest of us.
Okay, so I would imagine that stock buybacks can either be a good thing or a bad thing. So can you tell us about when it is good for us as investors?
That's right. Okay, so we're long-term investors. We're looking for opportunities to invest in things that are going to compound our money year after year. Stock buybacks is definitely an opportunity to do that. This is one of the ways that a company's management team can invest our money, can invest the earnings of the company and compound it, grow it. So we are looking for opportunities where a company is buying back stock, but at a price in which we would buy it back. So they're not buying back overvalued stock, they're buying it back at a time when it's under what we would consider a fair value.
So to you, that shows you good management because obviously they understand the numbers well enough that they see opportunities to buy back.
Absolutely. So the management team really only has three options to spend the company's earnings. So they can reinvest those earnings into the company, grow it, so it's a much bigger company in 10 years. They can pay dividends, and we've done a video on companies paying dividends. We'll link to it in the top of the video. And they can buy back their own shares. So we want the company to use this money that's going to be in our best interest, which is going to give us the greatest return on that capital. So yeah, this is stock buybacks done correctly can definitely do this. It allows us to compound our money without really having to put in the work ourselves. They're really doing it for us.
Okay, that makes perfect sense. Now let's take the flip side. When is this bad for us as investors?
Okay, well, a lot like dividends, stock buybacks can be very bad. It can be done in a way that is definitely sends up red flags to us. So one of the things that we have to watch for is that company is not buying back its stock when it's grossly overvalued. This is not a very good use of our capital, like we discussed. And it will temporarily push the stock prices higher, but it's not going to keep it up there. It's not actually creating value for the company or for us as shareholders. The other thing we have to watch out for is what cash are they using to buy back shares. We don't want them borrowing money to buy back shares. Like
That's
I said,
super important.
Absolutely, because they're not creating value. They're not actually growing the business. They're not adding to its competitive advantages. They're simply reducing the number of shares of the company. So it's leveraging their balance sheet to do this. Not a very good thing.
Yeah, I think that's a really important key takeaway as well too. What you just said about if you're taking out debt, it needs to be debt that's going to grow the company. And
Absolutely.
if you're taking out debt to buy back shares, that is not growing the company at all.
No, absolutely not.
Okay, cool, that makes sense. All right guys, we hope you enjoyed the video and found it useful. If you did, make sure to like this video, subscribe to our channel, and leave us a comment below. Remember, earn more, spend less, and invest the rest. And we'll see you next time.